This is Tom Nunemaker with Capital Discussions. This is my trading update video for Wednesday, August 6th, 2014. So we can see on the ES futures, the overnight action was pretty flat. And then about 6.5 hours before the market opened in the US, we had a pretty good increase in volume, and that lasted the rest of the night and pushing prices lower. And then near the open, about 200,000 contracts in 20 minutes were traded, pushing the market up. Then it sold off a little bit and never really got anywhere after that. A little bit of a volume spike at the end of the day, but overall it didn't really move the market. So how did that impact volatilities? Here's our combined volatility chart with the VIX, with the colored open, high, low, close bars. The S&P E-mini futures is the red, and the 1, 2, 3 month expiring VIX futures. So this is August, September, October, and you can see the spacing is pretty good. There's no blue lines crossing the farther line, so we're all in contango, which is normal. No backwardation, which indicates more fear. The VIX closed at about just under 1690 yesterday and 1637 today. So volatility did come out a little bit today, as you would expect, because prices really didn't go anywhere. Here's the SPX daily bars for 3 months. We are making lower highs and lower lows, so we are in a pretty good downtrend. However, the market did show some resiliency today. It opened lower and bounced back. So there is some buying coming in here. We're not sure if it's going to be enough to stabilize it or even reverse it, but it looks like it might be enough to at least slow it or go sideways, which is kind of what I'm thinking. I'm thinking, maybe in this region is where we're going to be for the next few days. So with that, let's take a look at OptionView. This is the ES futures options position. So right now we're down less than $100 combined. We have our two portions, one expiring in 10 days, one expiring in 24 days. And we can isolate those with the E and Y. That's from my T log. So if I just look at the vertical, this is what it looks like. And we have the 1945 as the short strike. So if you look at the delta of 70 minus 0.745 or 0.747, then you can estimate about a 74.5% chance that this will expire in the money. So let's see how that plays out with the probability calculator. So here's OptionView's probability calculator, and if we put in the price of 1915 and the at-the-money vol of 14.1, and our first target 1945. Oh, I got how many days ahead? So 10 days to expiration. So OptionView is saying that the probability of finishing below 1945 is 74.7%. Now, isn't that interesting? That's exactly the delta. So you can use delta as an estimate of the probability that that option is going to expire in the money. So let's take a look at the broken wing butterfly. That's down 462, and here's the risk chart. So we're pretty much in the middle between our expiration break-evens. The risk graph is nice and flat. If we load up T+1, and remember, you just right-click and just go T1, that will give you the next calendar day. And our volatility, 9.9, might be wrong. We wanted 14.1. We wanted this volatility, so we'll put it up here. So here's our 1 day, 1 standard deviation, and 2 standard deviation moves. And over that range, we're still looking okay. So I don't anticipate having to do much. I think it's going to bounce around within the 1 standard deviation. Maybe sell off a little bit, because remember the market is trending down a little bit. But that's okay, because we're negative delta, and as long as it's not a massive move, I think we'll be fine. So I'm not anticipating much to do there. Let's look at the SPX trade. This is the SPX trade. SPX ended up just a few pennies. I've put in all the current prices and we're down 11.33. Yesterday was down 12.88, so we've made up about $155, which is good. You know, we had 56 of data, probably another 100 from volatility coming out a little bit. If we look at the Greek calculator, we have greens here, which means we're probably looking at a pretty flat line. So let's take a look and zoom in a bit. We do have T+1 loaded in, so here's our 1 day, 1 and 2 standard deviations of price movement. So over this entire range, it still looks nice and flat. So unless we have something extraordinary, I don't anticipate having to do anything tomorrow. We'll just let data do its work, just monitor the market for big moves and see what happens. So I'll keep it short today. That's all we have for our trades. We'll monitor the market tomorrow, see what happens. I don't anticipate having to do anything, which is nice. So let's hope the market is nice and quiet tomorrow. Thanks a lot. Good trading to you. Bye.